Welcome to the channel Get Rich. Today we are going to look into a company who is a market leader in shock absorber. So let's go look at this company and what is this price potential for this particular company. So let's get started. So today the company we are going to look into is Gabriel India Limited. So they are the market leader in shock absorber for two-wheeler, three-wheeler, commercial vehicles and so on. So if you look into their numbers, they have 500 plus product models served, they have 50 plus OEM customers served, they have 660 plus aftermarket dealers, they have 12,000 plus retailers, and they have 35 different country presence, and they have about 4,000 employees. So their vision is to be in the global top 5 in shock absorber manufacturing in the world in the coming years. So that's a big ambition. So they're already a market leader in this particular segment. So let's have a look at the market price for a moment, how the market reacted for the past several years, and let's project how it will go price wise for the next several years. So the market peak for this particular company is in September 2017 about 212 rupees, and then it went down to 50 rupees. Currently it's trading about 138 rupees. So if you look at the P ratio, it's about 21.94 or 22, and if you look at the market cap, it's about 2000 crore market cap. So before looking into any projections, let's first have a business, what business they do and how much revenue are coming from which part. Let's have a look at that. So their main business is from two-wheeler and three-wheeler. So they have a shock absorbers which are manufactured for two-wheeler and three-wheeler. So 67% of their revenue is coming from two-wheeler and three-wheeler segment, and then 21% of their revenue is coming from passenger cars, and then 10% of their revenue is coming from commercial vehicles and railways, and they have 2% from trading. And if you look into the market-wise revenue contribution, so they have 81% of their revenue is coming from OEMs or original equipment manufacturers, and 4% from exports, and 15% from replacement market or aftermarket. And if you look at the geography wise, so they have 96.3% of their revenue is coming from domestic market and 3.7% from exports. If you look at the market share of these particular different segments, so they have two-wheeler and three-wheeler segment, they have about 25% market share, passenger cars 18% market share, commercial vehicles and railways 75% market share, aftermarket 38% market share. So that they are the market leaders. So they have at least they are one of the market leader. They have a huge market share in this particular segment. And then if you look into the segment wise how different segment evolve, so their two-wheeler contribution is increasing year over year, and then their passenger cars is contribution is decreasing, and their export is also increasing. So if you all look at their first segment, which is two-wheeler and three-wheeler segment, they have about 66% of their sales is coming from this segment, and they have a market share of 25%, and their revenue is increasing 4% per year. So they have recent launches like TVS Motors, Rider, Jupiter 125, they have Bajaj Auto, R107, CNG, their EV customers, they are having a lot of variety of programs they are doing. The Ola Electric is their customer. And if you look into their future development, they have electric vehicle like two-wheeler Okinawa, Ether, Ampere, and then three-wheeler Bajaj, M&M, and TA. And their top 3 customers are TVS Motors, Yamaha, and Bajaj Auto. So it's from their two-wheeler and three-wheeler segments. The good thing is they are also working with a lot of electric vehicle manufacturing, two-wheeler and three-wheeler like Okinawa, Ether, Ampere. It's very good because they are EV immune, so they are not disrupted by electric vehicle disruption. So then if you look at the passenger vehicle segment, 22% of their total sales is coming from passenger vehicle segment, and they have a 21% market share in this particular segment, and their revenue is decreasing by 15% because of their total automobile sector going down for the past several years. So that is also affecting this particular company as well. If you look into their new program, they are also doing with the Maruti Suzuki, YDM, YWD, YFG, and for example they have future development with M&M, Volkswagen, PSA, TML, and they have top 3 customers in Maruti Suzuki, Volkswagen, and Mahindra in passenger vehicle segment. And then if you look at the commercial vehicle segment, they have 10% of their sales from this segment, and they have 75% market share. This is also revenue is coming down because of the industry degrowth. So they have a new program with, for example, Vapco air suspension, and then they have with Force Motors they have some programs. And also if you look at their future development, they have Ashok Leyland MBB partner DAF2 programs. They have top 3 customers as Tata Motors, Mahindra and Mahindra, and Ashok Leyland, for example, in this particular segment. So let's have a look at the aftermarket segment. So aftermarket segment, so it's growing at about 7%. It's good even in during the downturn. Aftermarket segment is doing pretty good, so that's very good thing. So they also launched brake pads. That's also very good thing in the aftermarket segment. So they're the number 1 brand in aftermarket. They have a leadership with market share about 40% in India. So that's very good. They have a logistic network comprising of 664 dealers and 12,000 plus retailers. So their aftermarket segment is doing pretty good. And then if you have a look at their exports, so though their export revenue is very less at 4 to 5%, so the analysts are expecting them to increase their export percentage to about 10% to 12% in the coming years. So they are doing a lot of exports to, for example, Asia. They have won an order from Isuzu for Thailand and Indonesia in CV segment, and they are also doing 9% to Australia, and they got an export order from DAF Netherlands, Volkswagen Russia. It's comments from Q3 2021, and then they are also doing several exports to, for example, Europe, North America, USA, and also they are doing exports to Yamaha, Japan. So that's pretty good. They are doing a lot of export. They are trying to increase their export sales as well. And then if you look at their manufacturing locations, they have several manufacturing locations at different parts of India. They have 500 plus product additions, 25 plus countries of presence, and they have about 7 manufacturing plants plus 3 satellite plants. So they have about 4,000 employees. If you look at the different plants, for example, it's located in different particular places, and it serves to different segments and different customers. So for example, one in Nashik, it commenced in 1990. Their main client there is Bajaj Auto, HMSI, Suzuki, Yamaha, Piaggio, M&M, Atulato. So their different plants is catering to different segments and different particular clients. So they are strategically aligning with their customers' plans. So that's also pretty good. And then if you look at their industry growth comparison, they are always growing at a much higher rate than the industry. Only in the passenger segment they are growing less than the industry, but all the other segments they are outperformed. Two-wheelers 2.6% is the industry, 6.5% Gabriel India Limited. Three-wheelers 3.6% industry, 12.6% is Gabriel India. Commercial vehicle 1.5% industry and 6.9% Gabriel India. So only in the passenger cars they did not outperform. So 1.3% from the industry, and they did about 0.1%. So they did not do pretty good in passenger cars, but all other segments they outperformed the industry growth. If you look at their different customers, they have two-wheeler and three-wheeler customers like Atul, Bajaj, Honda, Mahindra, Piaggio, Royal Enfield, Suzuki, TVS, Yamaha, Ola Electric, Ether. And they are also doing passenger cars as Tata, Skoda, Toyota, Volkswagen. They are CV and Railways, Daimler, DAF, Ashok Leyland, Ford, Isuzu, Tata. So they are having a very good high profile customers. Most of the OEMs they have as their customers, and also they are very active in electric vehicle space. For example, TVS, Ampere, Ather, Ola Electric, Mahindra Electric, Hero Electric, Piaggio, Bajaj. So they are doing pretty good in electric vehicles as well. And then if you look at their customer awards, they have had a lot of customer awards. They got from Toyota, TVS, Honda, Wheels India Limited. So that's also pretty good. They are a pretty good supplier to most of the OEMs. So that's also good to hear. And if you look at the financial statements, so their revenue is growing at about 4%. It has a very good growth until financial 2018-19, I would say, and then it have a automobile sector as a whole had a degrowth, and it also affected Gabriel India Limited. So if you look at their EBITDA margin, it peaked at about 9 to 9.3%. Currently, it's about 6% or 6.3%. So there is an opportunity to expand their margin, because 6% they are at the lower end, so they can go to 8%, 9%, because they already did 9% in the previous years. So if once the demand picks up and if they can increase the revenue, and if they can increase their margin, that's very, very good. So there is an potential to increase their margin as well. And their PAT, which is growing about 5.1%, their net worth is growing about 13%, and then their return on capital employed, currently it peaked about 28%, currently it's 20%. It's mainly because of their industry degrowth, and they also degrew. And then if you look at their return on equity, that's also decreased. Return on assets also decreased in the year. So before they were doing about 10%, 18%, but currently they are only doing about 6% and 10%. That's not good. If they can increase their return ratios, that's very good, but because 6 and 10% is not that good, 18% or 10%, that's pretty okay. So if you look at the current ratio, that's also decreased to 1.4. Yeah, if they can increase to 1.7, 1.8, that's also good. So if they can increase the return ratio, it would be comfortable. And also if you look at their debt to equity ratio, that's very very comfortable. They are only at about 0.02. That's nothing, no debt, almost debt free company. And also if you look at their dividend per share, they are decently paying out dividend, and their payout ratio somewhere ranges between 20 to 30%. That's also pretty good. They are paying out their dividends to the shareholders. And if you look at their net worth, it's also growing, and the gross debt is yeah, almost 12 crores. That's nothing. And they have liquid investment about 268 crores. That's very good. And they also have cash flow from operations of about 204 crores in 2021. So that's also pretty good. And then if you look at their PAT growth from the analysts, what the analysts are expect Gabriel India Limited to do in next 1 or 2 years, how they are expecting. So if you look at that, so for example in 2022, so they are expecting about 100 crores, but I would say I'm not sure whether they can reach 100 crores, because yeah, one quarter they had a shutdown, and then that's because of that they have a very less profit at that particular quarter. So I am expecting it to reach about 70 to 80 crores net profit this year, but the analysts are expecting 2022 were expecting in the past at about 100 crores. And in financial 2023, one analyst is expecting 144 crores, another analyst is expecting 147 crores, and another analyst is expecting 115 crores. So 115 crores is the lowest and 147 crores is the highest. So analysts are expecting somewhere between 120 to 150 crore net profit for the financial year 2023. So that's good to hear. So because currently they are doing about, they are expecting 100 crores, but I would say they would only reach 80 crores, and analysts are expecting 150 crores. That's almost 100% rise, 80 to 100% net profit growth. So if they can do that, then the stock price will also shot up if they can pull this thing up. So they have a very good opportunity. I would say opportunity, or the stock is at a very good opportunity at this price point. So let's have a look at the valuation section. So before having a look at the valuation section, let's have a look at the shareholding pattern of the company. So the promoter holding is steady, and the mutual fund holding is increasing. So mutual funds are buying this particular company. And if you look at the FII, so they are decreasing this company. And also if you look at the mutual fund holdings, so most of the mutual funds, are some of the mutual funds which are already holding is increasing, so they are buying. Mutual funds are not selling this particular company. And if you look at the mutual funds, which are the mutual fund holding this particular company, so it's mainly HDFC Small Cap Fund and HDFC Capital Builder Wealth Fund. So HDFC Small Cap Fund, they are increasing their shares in October 2021, November 2021, December 2021. So they are buying. So that's a good thing to know. And let's have a look at the valuation. So they have about a revenue about 1700 crores in 2021. So in 2022 they are expecting to do about 2160 crores, and in 2023 I am expecting it to do about 2500 crores, with a revenue growth of 27% and 15% for 2022 and 2023. And if you have a look at the net income, I am expecting it to do about 80 crores this year, and then 135 crores in 2022. I am being conservative. 135 crores for example, and then if you look at the price target with the current valuation with the P of 22, so if you look at the 1 year price target, it's 208 rupees with 51% price cumulative growth. And because I'm seeing if they can increase their margin, they are a very good automobile component manufacturer, so they have a very good brand name. So if they can grow, see there, if the automobile can turn around, if the automobile industry can turn around, and if they can do pretty good growth, if they can own pretty good deals, and then their P can even re-rate to 25 for example. So I'm expecting the P to re-rate, and I'm calculating the price target with the P of 25. So in that case the price target for 1 year is 234 rupees with the price cumulative growth of 70%. So I would say this company is a very good deal, let's say, at the current market price, because it has a very good growth coming in the next several years, because they are the market leader, one of the market leader in most of the segment they are operating in. And I would say they are also active in electric vehicle segment, so I would say they can do pretty good in the coming years if automobile sector does a little bit good, because they are also present in aftermarket. That will give them a little bit of boost compared to the industry. So my personal opinion is, for example, yeah, this stock is a very good place to buy, for example, for the long term. And if this stock falls, yeah, you can gladly buy, because it's currently trading at a P of 22, pretty cheap. I would say it's fairly valued. But if you look at the net income increase, for example, currently they are doing about 80 crores. They have potential to do next year's about 130 to 140 crores. So if you compare that when the forward basis PE, it's cheap. So I would say it's a very good buy at this point. Or if it even falls below, then you can gladly buy this share. So that's my personal opinion. You have to do your due diligence before investing in any stock. So my personal opinion is, next coming 2 to 3 years, this stock can double or can give 100% return, my personal opinion. So if you like this video, like, share and comment. And also, if you did not subscribe to my channel, please subscribe and also click the bell icon below. So that's all for today, and thank you for watching. And if you want me to analyze any other company, please put it in the comment section below. So thank you for watching and have a nice day. Bye bye.